Welcome back. This is your next financial literacy lesson. This time we're going to discuss banking, and our objectives are to become familiar with the types of banking options available to us and how to choose the right bank for you, and also to familiarize yourself with the features of banks and how to maximize their benefits. This is a quick reminder that I'm not a financial advisor. These are purely educational videos, and that these lessons are designed to be done in conjunction with the correlated assignments. And so this is not a pure lecture, but it's kind of a listen and then stop and do the activity, listen and continue with the activity. All right. So we're going to begin with a warm up, and I would like you to reflect on one of these sets of questions, depending on whether you already have your own personal bank account or not. And if you do, I'd like to know which bank you use, what type of account or accounts you already have, how long you've had those accounts, and which services or features you use at your bank. If you don't yet have a bank account, I'd like you to reflect on how you will know when it is time for you to open a bank account and what your top questions and priorities are when choosing a bank to open an account with. And then for everyone, I'd like you to also brainstorm which banking institutions you know that we have access to here in Siskiyou County or wherever you are. Okay, so as we move forward, we're going to start with some vocab and some concepts. So let's talk about the difference between a bank and a credit union. So a bank is privately owned or publicly traded, and it is a for-profit business, meaning that it is in the interest of the bank to make money for itself or for its shareholders. Typically, banks offer more financial products and services than credit unions do, including online banking, though I would add that online banking is so popular and so common that most institutions are going to offer pretty good online banking services. However, banks typically have more physical locations and ATMs, often maybe all across the country, if not all across your region. Some banks have higher fees and charges than credit unions do, so that is something you're going to want to keep in mind. And they are federally insured by the FDIC, which is different from how credit unions are insured, but it is worth noting for sure that credit unions are also insured. Credit unions, on the other hand, are nonprofit institutions owned by its members. So it's kind of like a co-op. If you have an account with a credit union, you are technically a part owner of that credit union, and its goal is not necessarily to make extra money for its owners the way that a bank is. Membership is offered often to certain groups of people, such as those who live in a certain community, are part of a certain industry, or are part of a faith-based organization. The fees and the loan rates at a credit union can often be lower than at traditional banks because they don't have to worry about making a profit for their stakeholders. But the drawback is that they are typically quite a bit smaller and therefore offer fewer services. And they are still insured just like a bank is. So as you are just reading through those two different types of banking institutions, I want you to be thinking about which one might be right for you. That's going to depend largely on what's available in your area. But one thing to keep in mind, I think as a young person, is if you're currently in high school and you plan on moving away to go to college and you don't have an account yet, you might want to choose an account at a larger institution, which could lean you more towards a bank, so that you know that you will have access to your bank's ATMs or branches, wherever it is that you might be moving in the near future, as well as back in your hometown. Something to keep in mind. Okay, a couple more terms. This is about types of bank accounts. So there isn't just one type of bank account, there are multiple. The two that you are really going to be focused on are checkings accounts and savings accounts. So those are the two that we're going to focus on right now. So a checking account you can think of as your home base. It's where your income lands, where money coming to you goes and lives, and it's also where your bills and your regular purchases are getting paid from. It's kind of your quickest access to your money. It's easy to put money in, it's easy to take money out. You will use a debit card with a checking account to make those purchases. Things that you're going to want to look for if you're choosing to open a checking account is an account that has no minimum balance, ideally. And these like things that we're looking for are particularly true for young people that are maybe opening accounts without a lot of money. And so you want something where you're not going to have to pay to have this bank account, even though you're going to have a lower income for a while. So we don't want a minimum balance because you might not have a lot of money to have in your account. You are going to want to look for direct deposit and automatic payments. That way you don't have to actually cash your checks or put your checks in your bank. Maybe your income just automatically gets deposited. You can also set up automatic payments for things like your phone bill or your internet bill, so that you never have to worry about remembering to pay them on time and therefore accruing late fees. You're going to want an online banking app or website that is free and is user-friendly. That way you don't have to go in person to the bank and you can do a lot of your banking services online. And things you're going to want to watch out for are overdraft fees. That means pulling out more or spending more money than you actually have in your account. It can be very, very costly. And you also want to try to avoid monthly maintenance fees. That's one of the small ways that the bank makes money, is by trying to get a maintenance fee out of you. There are ways to get around them, and you just want to be very clear on what those ways are. If you're going to open a savings account, this is an account where you put money that you want to save, right? Like a savings account. So you'll still have relatively easy access. You can go and get money out of that account whenever you need to, but you can't use a debit card with it. So you can't swipe a card at a store or input it online from a savings account. You have to go through the bank to take money out and to put money in. And the reason is that we don't really want to use the money in our savings account very often. It's meant to be a piggy bank, right? For you to stuff money aside that is going to be used for a long-term or mid-term future goal. One thing that you could look for is that some banks let you create savings categories to help you budget and manage your money. So within your savings account, you could have a section that is labeled for saving for a car. You could have a section for an emergency fund. You could have a section for a down payment for a house, for example, or whatever it is that you're saving for. And that can help people mentally kind of block out their money into different chunks for different purposes. Similarly to the checking account, things you want to look for are no minimums, no maintenance fees. Some savings accounts have interest rates, meaning you can earn money by keeping your money in the account. This is particularly true of high yield savings accounts. We'll talk a little bit more about those in a future video on investing. And then there can be benefits to having multiple accounts at the same bank. So you might not want to have a checking account at Bank of America and a savings account at Chase. You might get some benefits by having both of those accounts at the same institution. Of course, look out for those minimum balances. And with savings accounts, you want to look out for limited monthly transactions. You wouldn't want to have to pay to take money out of that account. So that's a quick overview of things that you're going to want to look for when you're choosing a specific account, either a savings or a checking account. A couple other things to keep in mind, and this is a lot of the same information, but just kind of shown as like a benefit versus a drawback. So this is kind of your cost benefit analysis in determining what's right for you. So this kind of shows you a list of the things that you do want and don't want that you could use to kind of cross-reference as you're researching different accounts. Okay, So, activity time. You're going to stop the video here if you're doing the assignment, and you are going to start researching different banks and different accounts and determining what would be right for you. Even if you already have an account, I still want you to go through this process, and I would encourage you to look up the conditions of the account that you have and make sure that the account you have with the institution that you're at is the right one for you. So, you can look for these online on your own, but the assignment has listed a few different local checking and savings account options for you to research and determine which would be right for you.